Okay, for this part, we're going to hit a little bit of gifts and inheritance and then talk a little bit about scholarships. Yay. Alright, so gifts and inheritance. Now, when we talk about inheritance, these are going to be excluded from income. And they're basically income received from property after transfer is taxable. So basically, these are coming from estates and other little items where we've already taxed the item before we received it. We don't have to actually put in the income. Gifts are also excluded from income. Notice we're hitting a lot of the exclusions. Now, a gift is defined by the courts, so by law, as a voluntary transfer of property without adequate consideration. So basically, I'm just giving something without really getting something back, or I can get something back, but it's not really worth adequate consideration. Kind of like I give you a building, you give me a basket of muffins. Honestly, people are going to consider the building as a gift. It's fun. Gifts in a business setting are usually considered taxable income, though. Okay, so if it is your business and you receive a gift, like season tickets to the Texans games, this is going to be considered a taxable item. Now, code of ethics on gifts like that is completely up to y'all. Again, mostly for a good code of ethics, we try to keep it under $100. A lot of times it's $25. But to each is their own. If a recipient renders services for the gift, okay, so if we provide a service and we receive the gift, the amount is taxable. Again, mostly treating it as a business item. So we do have to watch out on gifts. And again, we end up filing a totally different tax return for gifts also to report those that we did issue those out. But we're not going to get into that. That's a little bit too much for our course. Again, if there's an advanced tax course, you get to handle all that fun stuff. But the next one is all about business. Alright. And basically, it's an informational return either way. I think it's like Form 990. Alright, so they do have this discussion with the PowerPoint, which we do have Diego is an attorney who supplies a list of potential clients to a new attorney, Malika. This list aided in the success of Malika's practice. Malika was very pleased and decided to do something for Diego. In the current year, Malika gives Diego a new car worth $40,000. Malika was not obligated to give the gift to Diego, and she did not expect Diego to perform future services for the gift. Does Diego have to report any income from this transaction? If yes, how much? Good question going on here. Now, again, you can discuss about this, but here's the main thoughts. Okay, so this is a gift in a business setting or taxable income, even if there is no obligation to make the payment. Okay, so they actually looked up this in a similar court case. So these are similar to a fact in court case, Duberstein, in which the Supreme Court held that the value of the automobile was income, even where there was no legal obligation to make the gift. So Diego should report the entire $40,000 as income. Again, this is the thing when it's all about business. If it's a gift, it's going to get declared. Now, if it was just two individuals, nah, we're good to go. But yeah, this actually kind of bite Diego a little bit. So he had to report $40,000. Probably he was happy about the car though. Kind of figure he was happy about the car. Now, switching gears, going for another item known as scholarships. Now, scholarships are typically amounts spent for tuition, fees, books, and course required supplies and equipment are excluded from income. Okay? Now, those are our items. But what happens with the scholarship if it basically pays other items? So, we do have to actually include scholarships amounts in income if the amounts are applied to room and board, which they try not to do, but if they do, they do. And any amounts received as compensation for required work, basically work-study programs. Both of those are considered income items. Okay, so we really wanted to keep it to tuitions, fees, books, and course-related supplies and equipment so that we can exclude the scholarship. And believe me, we do end up have to ask that question when a scholarship actually comes to a taxpayer. Alright, so we're going to conclude that right now, and we're going to end this part discussing those two. And if you have any questions over anything so far, please make sure you send me that good old email, and I will help y'all guys out.